Yeah, hi, good afternoon. My name is Ken Peters, and I have been a insurance professional and an expert in apartment insurance for over 25 years. I'm located in Seal Beach, California, and the purpose of today's presentation, it's specifically geared towards apartment owners and certainly property management as well. Yeah, the Fair Plan policy was actually designed, it's something that's provided for through the state of California, but anyway, the philosophy there is that it's for people that really have had problems. They really can't get into the traditional insurance market, and it's because either they're in a brush area or they've had real problems with claims, severity, quantity of claims. So either they've been canceled by their existing carrier or they simply, they've been turned down by a couple of different insurance companies. So there needs to be, shall we say, an outlet for them to secure coverage for their building. Comparing a fair plan policy to a traditional insurance policy, the problem with the fair plan policy is it's really quite inferior. The coverages, for starters, they use what's called co-insurance. Uh, there's a lot of unique problems with co-insurance. They also tend to have no liability coverage. You can probably secure that if the agent brings it to your attention, for one thing, that there's no liability coverage there. Also with loss of rents, which is a very important coverage. You've had a fire, you've had smoke damage, of fire. Your tenants have to vacate the building for possibly several months, a year, whatever. There's a loss of rents coverage. Under the FAIR plan, they only pay about 25% of your actual loss of rents. You want a policy that's the language is actual loss sustained for up to 12 months, and even you might want to consider an endorsement that you can get to take that up to 24 months. And the last little kicker about Fair Plan is the rates actually are extremely high. So you have a inferior coverage as well as high rates. Yeah, the problem with co-insurance is that, and I should mention that one of the things I've also done over the years in my 25 plus year insurance career is I've also done insurance consulting, and I have gone into many businesses and I have seen where they have co-insurance on their policy. Now, when I look at these policies and I look at the language, there's some very specific things that are just huge potential problems, and actually the people that I deal with and the policy that I would place you with, we don't do co-insurance. However, now, for companies that do, where it's a huge potential problem is after the fact, after you've had a fire, after you've had a claim, the language is such that then they will come in with their team, they will determine how much you should have had in replacement cost, I'm sorry, in total coverage on your building. So let's just say hypothetically, if you had the building insured for $500,000, after the fact, they come in and say, hey, you should have had $650,000 on the building. Therefore, you did not meet your co-insurance requirements. If you have a 100% co-insurance policy, you're required then at all times to carry 100% of the appropriate replacement cost on your building, on your business. Anytime you fall below that, if there's a claim, you then can be assessed co-insurance penalties. So you have a $500,000 policy, building coverage. You end up with, they determine, oh, you should have had $650 on the building. You have a total loss. Guess what? You're not even going to get paid the $500. You're going to get penalized. So maybe you end up with $350, $400,000, whatever it might be. So now you've suffered this fire, this claim, this, shall we say, trauma from that. Now you're going to get traumatized again because you had a co-insurance policy. It is a daymare, nightmare just waiting to happen.